At a docket today, we've got December jobs figures out from the ABS. Business reporter Edward Boyd is standing by in Martin Place for us. Ed, a big indicator today, and this of course will be the first real look at the strong indicator as to whether there might be another rate cut coming down the track.
That's right, Tom. The economists believe unemployment rate will stay at about 5.2% during the month of December, with a consensus of 10,000 jobs being added during the month. Looking back in the November figures, about 40,000 jobs were created, which pushed the unemployment rate down from 5.3% to 5.2%. Today, economists believe it will stay stable at 5.2%, and I had a brief chat to Ben Jarman from JP Morgan earlier, and this is his take on today's numbers.
We think the unemployment rate will hold steady at 5.2%. We have been seeing, as you said, a little bit of an improvement recently, but when we look at the leading indicators that have come in last month or so, what we do have in hand has been somewhat on the softer side. So we had a really sharp fall in ANZ job ads in December, and then that was backed up with some government numbers on skilled vacancies, which didn't do much to recover November's decline. So it still seems like if we're taking the last few months' worth of job advertisements, vacancies, etc., that it's saying the labour market is losing a little bit of steam, and that's why we don't think the unemployment rate will decline any further in the very short term.
So if the unemployment rate does stay stable today at 5.2%, then there's a very good chance that the Reserve Bank will cut interest rates next month from 0.75% to 0.5%. Economists are pricing in about a 56% chance of a cut next month, and this is Ben Jarman's take on the rates decision.
We are predicting a cut in February, so that would take the cash rate to 0.5. If that's delivered, it leaves a bit of a run-up now between February and the next budget for the government to prepare some sort of fiscal response, which would take a bit more pressure off the RBA for the remainder of the year. But ultimately, if our macro forecasts are realised, we still think that even with a bit more fiscal and a bit more monetary support, we'll still finish the year with an unemployment rate around about 5%, which is just not strong enough given what the natural rate is around 4.5%. So we do think the RBA will still be under pressure throughout the remainder of the year as well.
So I'll be here in the city. I've actually moved to Pitt Street where it's a little bit cooler. It was very hot in Martin Place. But I'll be here for the 11:30 decision, which will be released by the Australian Bureau of Statistics. Tom?
Ed Boyd, thank you.